Hi everybody, this is Andrew from Dividend Growth Masters. Recently, I've gotten a lot of requests from people about going over financial statements, and I think that's a really great topic because being able to read and interpret financial statements is really important to be a good dividend investor. So I envision this being part of a three-part series where I'll go over each of the main financial statements. So in this video, we are going to go over one of the more popular ones, which will be the income statement. Alright, so let's pull up an income statement for Apple. I'm just going to pull up the information from the SEC Edgar database. And we're just going to look at the quarterly income statement. So you've probably heard about the income statement before. It's also known as the profit and loss statement. And as the name suggests, it basically shows you the company's profit or loss over a period of time. So the income statement differs from the balance sheet because the balance sheet shows the business at a point in time versus the income statement, which shows how it performed over a certain period of time. So on the top here, you'll have the dates of the income statement. So companies, when they're reporting financials, so typically report the income statement for the current period and the prior period. So Apple is reporting the income statement results for the 3 months ended March 30th, 2019, and 3 months ended March 31st, 2018. So this period basically covers from January 1 to March 30th. And they also report the 6-month figures too. So this goes all the way back 6 months versus 3 months on the left here. So the income statement is pretty easy to interpret. It's probably one of the easier statements to read. So the only things that are going to be on the income statements is basically revenues and expenses. So let's go over how the income statement is constructed. So obviously the first thing you have would be any revenue line item. So Apple has both product revenue and service revenue. So product revenue would be things like iPhone sales, sales of Macs, iPads, that sort of thing. And services would be services like iCloud or iTunes, stuff like that. So if we were looking at a retail company like, let's say, Costco, there wouldn't be much service revenue, but there would be product revenue because that's what the business is. So below your sales, you'll have your cost of sales, also known as COGS. So cost of sales is basically what it costs to deliver a product or service to a customer. Now, if you subtract your cost of sales from your sales, you'll have something called gross profit or gross margin. So gross margin is typically expressed as a percentage. So what people mostly do is they take the gross profit and divide it by the sales to calculate a gross margin. And it's used very frequently because it shows how much it costs a company to deliver a product or service to a customer. So below the gross profit line, you'll have what are known as operating expenses. And these are expenses that are not directly related to delivering a product or service to a customer, but they include expenses that the company still needs to incur to be able to sell those products or services. So it includes things like research and development, marketing spend, selling general administrative costs for your accountants, for your finance people, for your sales people, that sort of thing. So those are your operating expenses. Now, once you take your operating expenses away from your gross profit, you'll have your operating income. And operating income is basically the income from the core operations of the business. Now, below the operating line item, you'll also have what are called non-operating income and expenses. And these are income or expenses that are not directly related to the business. So Apple right here, they group together other income and expenses as one line item. Sometimes companies separate them out separately. But basically, this operating income could include things like interest earned on the cash in the bank or any interest expense on the debt that they have on their books. And the reason why we have these expenses below the line, below the operating income line, is we want to separate out expenses that are used for the core operations of the business versus ones that are not. And after that, you have income before taxes. And that's exactly what it sounds like. So the line item before that would be your provision for income taxes. So these are the taxes that Apple owes to the various governments in which they operate in. And finally, you'll have your net income. So net income is the last line item on the income statement. And this basically is the take-home pay of the company after paying out all of their expenses, including taxes. Now, the last thing that you'll see on the income statement is earnings per share, also known as EPS. So net income just basically expresses the profit on the company on an absolute basis. So it's 11.6 billion in 2019. But another way we can express another way that we can express your income is on a per share basis. So we're dividing the income by the amount of shares outstanding. So 11.6 billion divided by 4.7 million, and we'll have a diluted share count of 2.46 dollars. So this basically means Apple is earning $2.46 of profit for every share that they have outstanding. So that's basically a rundown of the income statement. Now, not all companies will have an income statement like this, but they're very similar. Alright, that's a basic tutorial of the income statement. Hopefully that was helpful for you guys, and if you have any questions at all, just shoot me an email or leave a comment below and I'll get to it as soon as possible. And if you like my content, be sure to subscribe to my YouTube channel and visit my website dividendgrowthmasters.com for more information. I'll see you guys next time.